Hello, all. I welcome you to the daily updates by daily business news updates by Vijay Ramaswamy. So today we find that government has put a curb, or rather a ban, on imports of laptops, PCs, tablets, or similar goods into India from abroad. Earlier, the restrictions were there for products like tires or television uh, sets and air conditioners. So this is in the tablets or the laptops, the mobile phone instruments. So the market for that in India every year is about $10 billion. So there is a import duty for that. So earlier it was there, but after that India had a agreement within World Trade Organization, and those duties were removed. So now with this ban, it is expected that again those duties would revive, and uh, that would in turn trigger a demand for domestic makers. So predominantly, India is importing these goods from countries like China, South Korea, and Vietnam. So that might be a hit for them for those countries' exports on this aspect. And owing to this news, some contract manufacturers in India had a hike in their stock market price. So, and in terms of, so supposing if somebody is going to import a laptop for research purpose, that means there is I think about 20 items are allowed for that purpose. Otherwise, if you're going to import even a single laptop, then that is fine, but only thing is it should not be for commercial purpose. Right. Then the one of the largest telecom operator in India has released firm profits for the first quarter, and so that is it's been consistent performance in the telecom area. Then in within India, the fast one of the fastest growing cities is becoming uh, uh, is Pune is becoming one of the fastest growing cities. Typically, any multinational large player, they are setting up a shop in Pune in Maharashtra. So that is a city which needs to be watched very closely. The services sector activity has reached a 13-year high in July. So yesterday we saw the S&P Global India Manufacturing PMI Index. Similarly, if you see the services PMI Index, that is way above the 50 uh, benchmark rate. So it is about 62.3, so which is clearly indicating there is a expansion, and typically it's because of the new businesses in service sector. The continued to yesterday's INR uh, currency devaluing. So today, I mean the weakening. So today again the weakening continues, including the stock market prices. Similarly, in the bond market in India, for the 10-year bonds, the yields slightly increased. So, given this weak uh, situation, this very mild weak situation, there has been also some news about the long term macro level strength of India. So, it is a positive note. And Morgan Stanley has come up with their announcement, and they have cited the GDP. per capita of India, and it shows like that is one sixth of what China is today. So with that, they are expecting, and given the multipolarity in the global dynamics, they are expecting that India would be able to leverage that aspect much better than China. So given one sixth per capita GDP, so it is expected that India has a long run of boom market. So that is on, and it is also seen that there is a lot of FDI increase in India, especially even in the recent years. Japan has been in news for investing a lot in, strategically investing a lot in India. Right, the MobiQuick, similar to Paytm, the payment side, has shown a profitable quarter. So, what is very important is the this is the second quarter they are showing profit, and it is seen that about 60% of their revenue, what they get, it is from digital credit segment. So they are having new products and different verticals. So their growth is, their management is quite bullish about their growth. The IPO aspect, they have said that it is not expected in the near term because the market is not very supportive for IPO now. So they are going to wait and then go for that. And on the e-commerce side, again on the food tech, so the food delivery app, and they have the publicly listed app, so they have given their first quarter results, and the first time they are going black. So that is, they've gone from red. So this is because the income has increased about 60%, and this is because the spending has also increased about 50%. uh, but if you see the pre-tax profit, they were actually in red, but the post-tax profit, they are showing black. That is because of they have deferred tax gains, deferred tax assets, and they have a gain on that. So this is the so the publicly listed company food delivery app, this is the first time they are showing a profit. And their revenue for Q1 has been around, the total order value has been around 7,000 crores, and their income, like I said, it's been for the quarter has been 2,600 crores. So that gives an idea about the market for the food tech startup. Right, and in terms of the large services companies, one of the large services company has said that they are going to continue the no return to work policy, that is no return to office policy, and keep it more flexible, and promote remote working. So this is kind of contributing significantly in their profit margin. So this is the way they are going to uh, direct their capital expenditures in the future. And they are also shifting their cost base more from the tier 1 cities to tier 2 cities in India. That is again contributing for their cost margin increase. And another large auto maker in India, so their business division for electric vehicles, specifically on the SUV side, so that is valued at about $10 billion, that is 80,000 crores. So they have strategic investors now from different parts of the world with different expertise. So and they are expecting the SUV electric vehicles to be out in the market by 2027. And yesterday we saw about the Sangi deal, that is Adani, the billionaire's plan to double his cement production capacity. So by 2030. So the deal is very likely to get closed. So the 5,000 crore enterprise value, and the shareholders, they are holding 73 percentage. So initially, so the Adani Group would purchase the 57 percentage of shares from the uh, first generation entrepreneur family, and then the remaining about 26%, it will be given as an open offer. So that is and in terms of the brand, from the Sangi brand, it is going to be that will be phased out, and the brand of Adani Cement, which is Ambuja, um, so that will slowly, the customers and all the stakeholders, they will start experiencing the brand of Ambuja. So another interesting aspect is Adani Group hasn't signed any non-competent clause with Sangi after this deal. So that means after they have sold out their shares, it is possible that with their cement expertise, they're going to start another company. So but it is just an expectation which I'm saying. So that is there. And in terms of seeing Adani enterprise itself in this situation, they have their profits have climbed in quarter one about 44%. But actually they had a drop in revenue by 38%, but their cost also fell by 39%, so that actually contributed to their profit. So that's it for today. And um, in terms of uh, creating a better world, so I think yes, so there is a very important requirement, that is to strike an harmony and equilibrium both within and outside. So keep that in mind, because the situation inside and outside might be different within us and outside. So always there is a requirement to keep in harmony both inside and outside, and to keep it at equilibrium. Yeah, let's have this in mind, and continue our practice, and I'll speak to you tomorrow. Thank you.